Good evening. This is a little late in the weekly outlook, but I still tried to compound some ideas for the week. All right, so daily open, pretty significant. I mean, we had the weekly open over here. We kind of gapped down. It just stopped, higher load, and then pretty much consolidated. So accumulated through London session into an explosion. We did reach the upper bounds of the um, the upper daily. We were almost there. I guess there was a little, I mean, by 2 points we almost hit it. So I consider it hit the upper weekly for this current week. Current Friday, which is the OPEX, is 7,500. I'm assuming it'll start trickling down as the price consolidates in the area. But so far, we are still very bullish. There is with the fact that we hit the lower weekly last week, just end of the week, we really rallied from there. My guess is that if there is a pullback, it'll be back to the 7380 area ish, maybe 70, yeah, 7390. If there is a pullback, that would come in probably from data. But as you can see, there's liquidity stacking over here, 73, 7400. So there's very high potential that we are going to consolidate and hit lower mark. It would be a higher low or even a double bottom. I mean, we could create another double bottom like we did before we rallied and just, yeah, we had a double bottom over here and then it formed a lower high into a lower low, and that's when the lower low market structure, lower low, and then just rallied to a higher high. So the same thing could very well happen. Uh, Support is at 7420. As far as right now, we are above support. We retested it, and then we retested a higher low to finish um, the afternoon. Though you can see higher high, high, lower low, and it just kicks off, right? So if this is another lower high, then we are going to continue lower, and it could form a pattern. To be very honest, this is pretty solid. I mean, it could very well form some type of triangle to really break out either above or below. It looks like it could form a bull flag. It could probably go higher. I mean, this would be, yeah, Asia Open. So, I mean, we probably will break out. I expect the upper daily to be hit overnight because we're like all this liquidity, like everything is bullish right now. The techs are absolutely monstrous right now. This has been consolidating in this range for a long time, and it just exploded above. We swept the lows and we exploded above. Now I don't, you know, 3150 from the MAG ETF, that's possibility. As far as right now, until we really break below this area on the MAG ETF, I'm not bearish whatsoever. I actually think that there is some move left, probably another maybe five, 600 points on ES, I would say. 8,000 is possible. The 8,000 mark was already a yearly top that was spoken to and spoken about in a lot of documents and a lot of interviews. with investors, so it's very possible. I think that as far as right now, I'm not bearish. I am waiting for some support to break, and I would advise the same. We did gap up on VIX, which was quite weird to see VIX go up, and so did ES. So that could be a sign of a pullback coming in, a healthy pullback that would go and retest support. There is, we are, we never went below 200T. So really this whole rally has been fed by the tech. The tech sector is the only thing that's been pushing the market right now, which is quite interesting. So I would keep watching daily VIX. If the 20T crosses the 50T like it did in the past, we really started dipping then, and we could really see us rally higher. Uh, but as of right now, I mean, it's just tight. They're just tightening. I mean, they're 0.02 apart. So there is a potential where it could cross. There is, yeah, as long as, like, technically we need price to close below 200T. If it does close below it, then we have a chance for uh, higher potential on ES or all indices. Really, the market would probably just rally because the people won't be fearful. But as of right now, because of today, metals got a lot of influx, and they, like, metals were up, VIX was up, DXY was up. I think there's a lot of protection that are kind of starting. Dollar seemed to have found support. We'll see if it breaks that 97 area, 97.5. If it does start forming lower lows, then you could go see it to 96.5. That's potential. That would reduce pressure on the market, so that could be good for more upside. But as far as right now, really is what I'm watching is VIX. A close above 20T would really be bad because last time it did, when it did, the retest was a fake out, and then it just led to absolute giant spike again, and the market just started crashing. So this is basically what the result of April rally, and that's not, like, we should have been in these levels. We should have been in the 14, between 16 and 14, but we're not. We did not. We just remained above 200T. So I really want this to close below 200T. If it does, then we're good. We're good to see some more upside. But as far as right now, I mean, the rally has been so intense that there is just, like, that's not going to happen, right? I mean, this is insane. Like, you don't see this. This is basically this times two. And that led to consolidation and some pullback, right? Like, it just ended up chopping and pulling back, trickling higher, pulling back, trickling higher. This is just absolutely insane. This is days of pure bullishness. Even on the slight pullback, it's instantly bought. There is a potential that it's going to continue, but really, because this extension here is so outside of just that small range and it's the end of it, I think we're due for a pullback eventually. When, I don't know. That's why I want to keep my eyes on VIX. I want to keep my eyes on the dollar. And I want to keep my eyes on oil. Oil has been consolidating, and every time we get these spikes up, we do have a pullback. So is this going to lead to more upside? I would just keep watching the daily. That's a daily doji. On the 4 hour, you have a head and shoulder. So that could actually break lower. Though, yeah, because this is a lower low. And then the 4 hour would be, that is, yeah, we would really need to break previous week high if we want any higher price on oil. But I think oil is about to ramp up to at least 102, 102.7, 101.9. That would be my guess. Something's going to probably happen in iron and it'll break. I mean, you already have the market structure break here, and it it looks like it caught some bullish, a lot of bullishness. So ultimately, I think it's just going to keep going higher. We're going to get another good price read on oil. As a matter of fact, I might actually send a couple longs on that. That is not, there is a wick down there. Yeah, there is. And what about this one? Yeah, this one is empty. Okay, cool. So there's a potential that we rally back down to 94, 94.3, or we go straight up to 102 and then 20T. So to me, it looks like it wants to go up, so I'm probably going to send alongs to go up there. I really like that daily doji because I have a strategy that uses a daily doji in a 4 hour head and shoulder pattern or inverse head and shoulder pattern. And there's one right here. And technically that would be this and that. There's a potential here. This would be the inverse also, inverse leading to a high. And then here, if you have a retest of this, maybe this market structure break would be 97.33, and then you have the other shoulder and it just explodes. So I'm betting on oil to go higher. If oil do go higher, and then that would explain why ES is also failed to form a higher high. And on the daily, we did break above, so then this daily today on Tuesday needs to close higher than 74.56. We need to go to 74.56, 74.60, and we need to close the body above that to continue higher, just like it did here. Like here was only a wick, and then they formed a low. The low caught the weekly, caught some buyers, 50% range of the previous day, and then it just rallied all the way past. Same here. You have a retest of previous highs, and then it just launched, right? So this is the kind of stuff you need to keep track of because that will give you a good idea of tomorrow's sentiment and gives you a bias as to what's going to happen in the coming day. That being said, energy has been just consolidating. It's kind of boring. It's been consolidating since February. Obviously, I mean, that was winter, right? So ultimately, you always get a pop during the winter, and then the rest is just consolidation. But it's still trying to break out. There's potential for 2.93-ish. See the reaction at these area. If it bounced, then it'll go lower and form a lower low. If not, it'll break above 3.233. So we have a chance to kind of go and test this resistance over here. Gold, I did have a few patterns. I said back then if this continues higher, it'll break, it'll consolidate here and then break around this range. I think gold could possibly, if it closes above 47.50, it'll probably end up going and testing this area over here, and then that's where we would break out. We either break out or we continue consolidating higher. But this is a huge channel, and it's going to test this upper bound eventually. And the reaction of that upper bound is really going to be our make or break. If it does not break out, it'll come right back down to 3,800. That would be very bad. But at the same time, we could short, so it's not much of a big deal. Another one here. That just fucking breakout. It absolutely just madness. Like that was so clean, clean channel. It was testing the top. They bought over here and they just pushed that out. Market structure break. This is probably going to go higher. That's why I think gold is likely to follow through and go inside this area over here, previous month high, and therefore hitting the top of the trend line for a third tap. Um, as much as I don't want it to do that, I would rather have it go down first, but it is due for a tap higher. And I think that's exactly what's going to happen. It's going to tap higher and then it's going to start trickling down. But silver was the first one to break out. And so far, I would say it's probably going to go to 92 to, yeah, 90, 93.3, 98. I wouldn't say it's going to go for a higher high, but there's an entire range here that the price can stack and consolidate inside that area. So it's very, very interesting. Other than that, I had my eyes on Ethereum because of those two resistance at the top, but Ethereum is just stuck. Like it's absolutely just stuck. It doesn't do anything. There's liquidity above, there's liquidity here. It's stuck in a wall of liquidity. It's just on both sides. Like a retest low would trigger all of this, and then a retest high would likely go to POC and then see if it's a valid support or a resistance. And then if it is support, then it'll go 2,900 and maybe more. But at the same time, there's equal highs at 33.98 that are not been swept yet. So it's just a waiting game at this point, while Bitcoin is nearing his trend line from previous uh, previous lows. So that is also another. It's been ramping, which is weird that Ethereum is not. Bitcoin's almost like giving the sentiment ahead, and then Ethereum is just slow. They're not trusting this yet. And I think Bitcoin needs to close above 200T on the daily. So that would be 83,840. Once it closes above, it'll have a chance to retest the top of the trend line and then finally break above the trend line again to go and reach the liquidity that's stuck over here from 86 to 92.8. So I would keep an eye on this. Looks like this is a bunch of liquidity. I mean, all this is bullish. It came out super bullish. It did consolidate a little bit here, and it just continued trickling higher, catching all these levels. So you really want to see that happening within the next month or so to have some higher upside. I honestly don't have much else because I have not looked at anything else. I don't really care because at the end of the day, all the money is in futures right now because of those rallies. I don't have any stocks either. And the video on figuring out money, which I follow for quite a while now, has all the information as to why we could be at a top. And I would rather you guys go and show some love over there than me explaining it again when he has more information. So that's something to consider. Also, this new chart I made, DRAM is fantastic. DRAM is on a rampage again. It is at a resistance. Now it's a resistance. So think of it as if the market tops, DRAM will get a pullback and likely go back and test its POC at 46. So that's something to consider. If it does, there's going to get a bunch of buyers that are going to come in. I don't see it go down here, even though there is buyers, but I mean, $37, that would be a pretty discounted price. That's if the market just goes on a bear market or some sort. If we get a very, very bad pullback, um, or some war news or something that's going to happen, sure, it can go back down there, down here, 42. But as far as right now, if it does pull back, I see um, resistance or support rather at 48, and then 46 would be the bull bear for the memory ETF. Same here, but here we don't have. Where is that POC? Oh yeah, it's really low because it's actually, yeah, it's semiconductor, so it's been around for a while. I mean, you can't tell me that this is not going to pull back eventually, right? Like that makes sense. Last pullback was nearly, yeah, 5.5%. So I mean, as soon as it's pulling back, 5.5% is not that bad, but it is still 5.5%. So think of it as soon as these dailies starts closing bearish, you want to short this. That's a doji. This, if it breaks higher, if it closes higher, it's going to continue higher. If it closes lower, it's going to come and retest these area over here. So you have room to repurchase and get yourself in a position to ride this, because these two, the fact that this went into a rampage from the 300 high 300 mark is just insane. Like that is insane. And to 2025, you had this at like $200, and it just rallied all the way to 576. Like the whole market is propped up by tech right now, semiconductors and tech. So if you look at the heat map for last Friday, it was a sea of red. Again, it's in FOM video, and more than 60 stocks were all red that day, and only 30 were actually keeping the market afloat, the SP 500. Yet we still rallied almost 2%. So it's one sector. It's one single sector. That's dangerous. Last time we saw that was in 2023 to 2024. I mean, granted, okay, cool, the market rallied, but as soon as something broke, the market fell every time, and it fell pretty drastically. So the volatility is going to be there as soon as we start, uh, as soon as all the investors starts thinking it's a top, we are going to come down very, very violently. And that's going to be our shot for a purchase. And I think there's still 8 to 18 months, I would say, left. And I say 18 months because there's, like, what if we consolidate for 2 months and then the summer happened? We consolidated to a top, the summer happened, and then we just start dipping. We dip about 1,000 point. And then the summer's over, and the same, we get another rally back to 8,000 or to 8,000 or 75, 78, almost 8,000, and then after that the bear market start. Like we have plenty of time. It is because of the amount of demand and the amount of buyers that came in to see this happen. That's complete euphoria. Like this is the top of euphoria. We're going to get a pullback. We're going to reach a top, get a pullback, and then form a lower high. And I shared that photo in the server. So that is likely what's going to happen because it happens every single fucking time. Every time. Every time there's a bull market, it leads the last phase is euphoria. And if you can't tell me this is not euphoria. That like there's no other explanation for this. So we're almost there, but we may not because of all the consolidation that could happen, and then the rest of the sector that has not followed through yet. So that's to keep in mind. These are not updated levels that I will update tonight, actually, for tomorrow. And as we did not hit the upper daily, we did not hit the upper weekly. Upper weekly is based on Friday price action. Upper daily is based on, well, it would be today's price action. We almost did on ES, but we did not on NQ. So these levels will probably move, and I'm assuming overnight we're probably going to get some of these over here. Asia Open was actually bearish. It did send it low, so that would be a clean lower high as far as I'm seeing, but it's going to form support here. It's probably going to stop somewhere around here, 71.30, and then break out. There's a potential that it's going to continue, so I'm going to leave this over here for my own reference. If it breaks above, then that's when the breakout's going to happen to push it back to upper daily. And honestly, I mean, we might retest POC. There's going to be 3 legs. That would be the first. But the thing is this is such a liquidity fetch, which led to higher low, higher high. That would be another higher low. So it's a series of low. Now we're in a series of higher lows and lower highs. So there should be another higher low somewhere, either here or here. So we could retest BOC. And if we do retest BOC, there's plenty of liquidity, bullish liquidity. So we could actually just, since there's no data or any news of any sort, we could actually just come back up and go back inside that pool. So yeah, that's what I see for this week. It is OPEX. A lot of stuff is about to expire. The lower weekly is 73.43. So there's potential that we go back down there, or we go straight up to that 7,500. The puts to call ratio is in the server, and then I will continue updating those just to make sure that it is right on track for what's about to happen. But yeah, we're forming a little flag over here. If this support holds 74.30, if that holds, it's going to continue back up. There's a lot of bullish volume that right at the close came in. So last time it did have a pullback and then consolidation into upper bound. So that is something to watch. Just be careful. Again, it is OPEX. Don't play stupid. And I will catch you in the server.